Good morning, everyone, and a very warm welcome to the CPPR Dialogue. The CPPR Dialogue is a flagship webinar series that brings together policy experts, business leaders, and practitioners to engage in meaningful conversations on pressing policy challenges, fostering informed debate and actionable solution. In today's edition, we are hosting a timely and forward looking discussion on future proof farming, technology, talent, and investment pathways for a resilient agri sector. I'm Shobha Vasan, Associate Research and Projects at CPPR, and I have the privilege of moderating today's session. It is a pleasure to have you all with us as we mark National Kisan Diwas today. On this day, it is important not only to acknowledge the sacrifices of farmers, but also to shift the narrative towards a future of agriculture, one that moves beyond chronic distress and instead focuses on viability, profitability, and resilience. With the right institutional support, technological interventions, and investment frameworks, agriculture can indeed function as a sustainable and profitable enterprise. Yet, Indian agriculture continues to face structural challenges ranging from land fragmentation and climate stress to distorted markets, rising input costs, and limited access to capital. To unpack these issues, we have joined by a distinct panel of experts who have actively worked to make agriculture more modern, feasible, and farmer centric. Today, we are honored to have with us Mr. Sridhar Ishwar, Director of Samunadi Foundation. With over 35 years of experience in banking and agri-finance, Mr. Ishwaran has been instrumental in facilitating capacity building initiatives for farmer producer organizations, aggregating market, and enabling innovative agri-finance models. He is also a founding member of Samunadi Financial, one of India's leading agri-enterprise platforms. Welcome, Mr. Sridhar.
You pleasure to be here.
Thank you, sir. Uh, Now we have Mr. Emmanuel Murray, Investment Director at Caspian Equity, an investor with over 42 years of experience across agriculture, rural credit, and agri-enterprise finance. Mr. Murray manages the Leaf Fund, which supports early and growth stage food and agriculture startups with strong social and environmental impact. His experience spans impact in investing and BFCs and farmer-centric institutions, giving him a rare blend of policy insight and on-ground market understanding. Welcome, Mr. Emmanuel.
Thank you. Thank you so much.
Thank you. And we have Mr. Devan Chandrasekhar, founder of Fuselage of Innovations, an aeronautical technologist specializing in UAVs, machine learning, and sustainable innovation. Mr. Devan developed scalable drone solution for precision agriculture and impact assessment. With over a decade of experience across 8 countries and recognition as Forbes India 30 Under 30 honoree, he brings a strong technology led perspective to agricultural transformation. Welcome, Devans.
Hey, hi. Happy to be here.
Thank you once again for joining us. Dear audience, if you have any questions, please feel free to share them in the live chat. We will be addressing them towards the end of the session. So let's begin today's session by examining farmer producer organization, which are often presented as an ideal institution solution for augmenting farmers' income and strengthening agriculture value chain. Despite strong policy backing and institutional support, many FPOs struggle to survive and scale up, and only few emerge as a sustainable enterprise. So I would like to ask Mr. Sridhar, being a director of Saumanadi Foundation and someone deeply involved in nurturing FPOs across the country, could you help us understand why many FPOs fail despite policy support? What are the key structural, financial, or market risk related constraints that prevent FPOs from becoming a self sustaining and valuable entity, sir?
Oh, thanks, Shobha, and pleasure to be part of this conversation. See, if you look at from an Indian context, there are 85% of the farmers who are smallholder farmers, and they are vulnerable because of the landholding size, the climate challenges, the market challenges, getting access to finance, still dependent on the informal markets. So FPO is the right medium or a platform wherein you can have the aggregation done so that you are able to give the benefits to the smallholder farmers with the main objective of how do you enhance their income. Now, if you look at from a policy perspective, so the overarching objective is to, as I said, improve the economic conditions of the smallholder farmers and ensure their long-term viability and prosperity. As we speak today, there are 40,000 plus farmer producer organizations in the country. And we at Samunati, we engage with almost 6,000 plus FPOs across 26 states, providing them with access to finance, market connect, technology, and advisory services. Now, if you look at from a policy perspective, it was only two nodal agencies, which was SFAC and NABARD, which used to, provide grants to formation of FPOs. But today, there are NCDC, NAFED, and also the lateral agencies, World Bank, IFC, and ADB, which are also into this space, and they also promote a lot of farmer producer organizations. Yeah. But definitely, if you look at from a policy dimension perspective, why the FPOs are not able to scale and what are the challenges? Now, most of the policy, you know, it's towards support which is at the front load. For example, registration of the FPOs, giving them initial grants, a equity guarantee scheme, extra, etc. But these are all short term. By the time you promote an FPO, bringing all the farmers together, getting the registration done, doing the little bit of capacity building, training, it is almost like 1.5 to 2 years. And the entire policy support is only for 3 years. So by the time the FPO is on their own, the policy is not. So that's the reason many of them really find it very difficult to scale, right? This is one of the main challenges, wherein you cannot have a policy which is only for the first 3 years formation, wherein the 2 years is going only for doing the groundwork, right? So by the time you have the member mobilization and all, the main important point which is needed for any FPO with the shareholder capital or some of the equity scheme grants which they receive is not sufficient for them to start an activity, right? We are talking of 500 to 1,000 farmers in an FPO, and you need enough capital for them to really get into the input or the output or the procurement side of the business. Then might be you can talk about the value-added services and other things. So that 3 years is very short time. So that's the one of the first challenges that we are talking about. Second, if you look at from a policy perspective, it is a one size fits all. For example, there are many of the FPOs who all operate in different climatic zones, right? So do you have a policy taking into that consideration? Second, there are many of the FPOs because of the climate, they are only into a horticulture. And there are many FPOs which are into staples. The third important thing is there are many FPOs which are in a block where access to market is very difficult for them. Vis-a-vis the FPOs which are in Maharashtra or in Madhya Pradesh, where they have access to markets. So from a policy perspective, today at this point in time, it's a one size fits all, right? So we need to have a policy which really takes into consideration all these aspects, and accordingly, you should have a policy which is looking at can we have a longer gestation period wherein a support to an FPO can be given 7 to 10 years. Can there be a clear milestone based financial support given to them? Can we have access to finance, a working capital given to the FPOs based on parameters? Members mobilized, the business, what they have done. Can we bring more banks coming into giving access to finance? Very important. If you look at the entire scheme of things, I will just give an example. If you look at how the SHG movements really picked up very well, because over and above the NRLM, there was also this SRLM, which was playing a very active role by giving access to finance to the SHG groups, getting them markets, getting them all the capacity building trainings and all. Whereas from a FPO perspective, it's only a support given for the formative years, but it was left to the resource institution or the CBPO to do all those activities. Very less role played by the state government, or there is no institution I can say which is there at the ground level. So these are some of the challenges. So if you look at all those things, couple of things which can be looked into from a policy perspective is, can we really look at support and bring out the policy saying up to 7 to 10 years to make it more economically viable and scalable? Number two, can we bring them more access to markets? And definitely, is there a financial structure? Is there a financial solution? Can we bring in more banks? Today, banks are not even going to the FPOs because it's a private limited company. All your lending norms comes into the mix in terms of profitability, balance sheet, turnover, and all, which is very difficult, right? As I said, it takes 5 to 7 years for any FPOs to come to that level. Third important is technology innovation. How can you really look at it, right? So these are some of the things which I just thought, look at. Very important is, if you look at going forward, the policy should be more towards not opening or promoting new FPOs. Rather, can there be an enabler in terms of consolidating some of the FPOs that needs attention? Can there be a merger that can happen at a cluster level wherein one or two FPOs are doing very good, but there are 7, 8 which are really struggling? Can they be merged, or is there is a consolidation that is can be looked into, right? Federation. There are very few federations in the country as of now, 3 or 4. When you have a federation, definitely there is a lot of opportunities. The objective here is, if you really look at from that dimension, so we can actually see, the smallholder farmers get benefited. So I take a pause. Good.
Sir, as Sridhar sir rightly mentioned that it's very difficult to scale up FPOs given the policy failure, and most of the investment which government does for FPOs is in the first phase. And even the from the Thomas's budget during Thomas's cabinet, we saw a extreme budget allocation for making 1,000 FPOs. But then what we see after 2020, when we reach 2025, we see most of the FPOs are not successful despite the government, NABARD are investing. And we see that banks are very reluctant to address the FPO topic. So, Emmanuel sir, can you tell us why banks and other financial entities are not ready to take up any FPO and finance them more than what NABARD and all other major government agencies do?
Yeah, okay. Thanks, Shubhat. So, uh, actually, from my own experience now, one is as a director on Kisan Finance, which is, I think, next to Samunati, the largest lender to FPOs, and the other lending from Caspian that we have done to a few FPOs. What I can say is the success in lending to FPOs is more than expectation. It is actually not under financing. Of the 40,000 odd FPOs, maybe around 10,000 are bankable, and closer to 5 to 6,000 have received some or other kind of support from various institutions like NBFCs or banks. So clearly, I think there are serious constraints in financing FPOs, which need to be appreciated. First, of course, is the understanding of business. Now, these are institutions of small farmers who have never directly dealt with the market as an institution. Mostly they've been selling to a trader or to some local aggregator. So trying to understand business is not easy. Trying to uh, deal and negotiate with somebody who's very seasoned in this space is not an easy job. Second, as we see, most FPOs, the governance structures are pretty weak. So either there is total reliance on one or two directors or the CEO, and this is fraught with serious risks. The participation of members in the business is also on an average 20 to 25%. So 75% of FPO members usually are dormant. They just purchase share capital, and that's the last thing we see about them. Finally, I think over dependence on CEOs also, or the CBBOs. You know, these CBBOs, a majority of them are have their origins in development sector, NGOs, and others. So they themselves do not have a business orientation, and that limitation flows to the FPOs. But in spite of that, you know, their dominance in managing FPO rather than letting these institutions evolve into self running business organizations, that is an issue. CEOs who are unstable, again, we see that as soon as there's some turbulence, some problem, the CEO resigns and leaves. So there's a instability in the CEO's tenures also, which we see. We also see the market fluctuations in prices. So most of these commodities have cyclical nature of production and prices from year to year. And if the FPO is taking upon itself the risks of holding the commodity or trying to insulate the farmers by taking some of the price risk on themselves, that's a pretty risky business. So that doesn't happen. Uh, Also, as we see, the volumes that the FPOs trade in are so small that they're not directly able to negotiate with large corporates. So the ability to negotiate with large corporates, also because these volumes are small, quality is also inconsistent. We have to take whatever the farmer gives rather than say only this quality we will take. So that is also constraining the capacity of the FPO to deal in larger scales of business. We are also seeing issues with cash flows. Now, any loan has a specified repayment schedule, an installment to be paid on a particular date. Matching that, the cash flows of the FPO cannot be predicted. And if there are delays in receivables and inability to honor and to pay the installment on time, then the lenders start getting jittery. And typically, from my experience, almost 25 to 30% of collections of loans are delayed because of various reasons, including collections and cash flow issues. And all these get reflected into the risk, and therefore lenders are averse to lending. Mainstream banks, again, for them, this business is of a very small order. The volume of business they can get from an FPO as a whole, countrywide, is also small. Trying to have manpower who has specialized knowledge on this for such a small and a seasonal business also. It doesn't make sense for large banks to deal in it. So it will have to continue to be serviced by specialized institutions like Samonati and Napkisan, rather than trying to say that the banks are not coming forward to do it. The advantage with banks is they can offer what are called credit lines or CC limits, and they can offer credit at a cheaper rate. These are the two advantages. But then the uh, possibilities of this happening on a large scale are in the short term quite remote.
Thank you, sir. Thank you for your insights. And we see that the only linkage between farmers, market, and all the dynamics which happen presently is technology. Because recently we don't have much space to extend land, and most of our outputs are driven by technology. whether it may be like high seed variety or precision farming using drones. I would like to ask Devan sir, how does drones come to a picture as a solution to reduce pest attack and increase yield, and how does drones help farmer increase their income and increase their yield?
Yes, yeah, actually, I'm happy to answer that because we are having an experience that is uh, all the way from fuselage starting from an inception stage. We could see some problematic scenarios in particularly in Kerala and climate change, how it adversely affecting in between farmers. So, like drones are there in last 2 decades and contributing in agriculture. Like what we think about, traditionally farmers following the plant treatment based on the soil characteristics. So we think about how it will change if we go for a data-based approach, like analytics based on the crop growth characteristics, how it will work. So we introduced 2 products. The one is called an Erich, it's a surveillance drone, and FIA, it's a crop protection drone for the spraying and spreading of fertilizer. So the integrated approach, we could see we done some trials in many agri clusters, including tribal sectors, and we could see that that approach making them some impact in the form of yield increase and some consumption reduction also happening there. So after all that validation stage, we tried to introduce in between some farmers as a free of cost. So based on some value addition, we started as a hiring model, like a rental model. We started as a subscription model. We introduced on an average around 20,000 acres in first 2 year of usage. Then we could see that customers continuously adopting their technology in upcoming crop season. We think about providing drones as a sales model. Then the product undergone many certifications, including the civil aviation. And after all that, we introduce our product in a very affordable manner. That's our motive with this project. Like farmers need to, even the subsidy scheme is there, but that schemes are not sufficient to the entire farming sector. So we think about providing as an affordable solution. So we could see that farmers getting some attraction in this product. Uh, that is, one is technological wise, it is the efficacy is higher, like it's reducing the labor cost and some cost cutting in terms of labor cost, and the efficacy per day 40 to 50 acres with a single drone, it could be covered. All those parameters, converting them to the technology, and they started adopting the drones and using it in their normal practices. And apart from that, some standardization also they are gradually adopted, because even we having proficiency in certain crops, rice, tea, sugarcane, vetiver, and pineapple. So that protocol what we developed also, they started understanding it. It may create good quantity as well as qualitative betterment in their farming practices. They started adopted that interventions in their farming practices. So that's all. We continuing R&D in that particular crops, and parallelly we increasing our limit to reach the more farming sector. Basically, our major projects are happening in Kerala, Karnataka, and Tamil Nadu, and upcoming year Maharashtra, and uh, gradual growth of interventions of our technology. What we planned in next quarters. Yes.
So, sir, technology is a very viable solution to deal with the reducing crop failure and climate change. So, given this context, can you, Sridhar sir, can you throw some lights? How can FPOs be integrated with agri startups which can enhance income of both agri startups and FPOs, and even reduce the problem of climate failures and reduced risk in the farming. And also, how can we enhance income of both FPO and startup and bring down the labor force from agriculture, which is a vastly debated subject across the country now?
Very good question, actually. So, we at Samunati, we encourage agri startups. Okay. In fact, within Samunati, we have a platform wherein we collaborate with all the agri startups because they have a good solution. And these solutions are meant for smallholder farmers. As you rightly said, could be from a climate perspective, could be from precision farming, could be how a drone technology, just now the earlier panelists spoke about, how it will add value to the smallholder farmers. The challenge today is for the agri startup, the solution is available. They have looked at in terms of the challenges, but how do you reach the smallholder farmers, right? So the FPO becomes the right medium because FPO work with 1,000+ farmers. So it becomes easy for any of the abstract agriculture startups to collaborate and take it forward their solutions. So Samunati bridges that gap, right? So first and foremost, we also look at the solutions which really adds value from a startup perspective, and we bring in many of the farmer producer organizations to adapt these agtech companies solutions. Can be a drone, can be a cold storage, can be a climate related, all the new solutions which is available. It can be a soil testing, right? What is the objective over here? As you rightly said, it has to help the farmers in their day-to-day activities, and this gets into three categories, all these solutions. One is sowing, pre-sowing, one is production, third is post-harvest. So there are many of these startups who are coming on these three buckets, and we support each and every entity because their products are relevant and they are really going to add value to them. So the way we do is, first and foremost, we also help the startups to scale, to help them do the pilot on the ground to test the product. So that's how we also see that if they are able to do it for one complete crop cycle end to end, and they are really seen, because definitely there will be challenges in terms of on ground, there will be expectations from the farmers, there will be a lot of technical issues that needs to be sorted out. If these things are taken care of, then definitely the scale is not an issue. So that Samunati then does two things. Number one, we work with the startups by, number one, helping them go to market. Number two, how can we also facilitate providing them with financing facilities? They are also able to increase their revenue. They are able to protect their margins. They are able to take care of scaling. Coming at the smallholder farmers level, through the FPO, there are two things that is happening. Number one, we are able to bring these solutions. So the farmer is really able to use this technology platform or the solutions so that they get the benefit. Either the yield can go up, right? They can also, the technology can tell us in terms of what are the weather predictions. Accordingly, they can take care of their farming activities, what precautions that needs to be taken. We also give them with a lot of other advisory services. So agtech solutions play an important role. And we at Samunati continuously engage with all the startups in the agriculture sector by giving two things. Number one, help them scale. They are also able to generate good revenue, and they are able to innovate more based on the ground level pilot programs and all that we have helped them and assisted. At the FPO on the farmer level, especially at the FPO level, the earlier gentleman spoke about the drone technology, right? Let me give an example. If the drone has to be continuously deployed on the ground at the farmer field level, very difficult for individual farmer to buy a drone. So we in fact do the entire pilot and we look at, can we give the FPO a business model where they buy the entire drone, which will be like a customizing center for them, and they in turn give services to the smallholder farmers. Today, FPO is already helping them on the input side of the business, output side of the business. Now, why can also they give drone as a service so that the farmers are able to get it as a service. At the same time, the Actec company, which is a drone manufacturer or the drone company, they are able to just engage with the FPOs and see that all the after sale services and technical services are issues are resolved. That way, the startup is also benefited because the go to market is already there. The FPOs are able to get a new stream. They are also able to get a good business from what they were originally doing, the input and the output. Now they are also getting into more value added services that will also get them enough income. And also, the very important aspect is the trust and the transparency, which is very important, right? Between the members and the FPO increases. Because the member farmers now look at, okay, my FPO is not only giving me the input and taking care of the output, now they are also helping me on bringing in more technologies, which is really helping me in my day-to-day activity. That also increase the income. Automatically, I am able to see the profit being coming in, right? So these are some of the things that we at Samunati actively support the startups, FPOs, and the small.
Emmanuel says, so how do you look at integrating FPOs, startups, and technologies together in one umbrella? And do you think like doing so by integrating all three together, it will be better, or do you think that small and marginalized farmers will lose out in this process? Because there is again a big choice debate which goes on when the whole concept of joining an FPO or coming into an MOM with agricultural startups come in.
Yeah, so I think there are a multiplicity of services that FPOs offer, which are relevant, which startups offer, which are relevant to smallholder farmers. So logically, it makes sense to work with them. But again, there are issues around dealing with multiplicity of startups. So can an FPO deal with so many of them simultaneously to take their solutions is one question. Second is, of course, the issue of economics. How is the cost and benefits shared between the FPO? How is it priced to the farmer, and how much does the startup take? So that is also something to be properly negotiated. And finally, also the issue of trust, which Mr. Ishwaran was also talking about. There is a serious trust deficit between FPOs and startups, where there's a fear that after getting all the data about their farmers, the startup could bypass the FPO and start directly dealing with the farmers in course of time. So that is also an issue. So there needs to be some kind of a platform or a lead startup that takes the initiative and brings several solutions together, bundles them, and offers them to an FPO and to its farmers. And that way, this could be one mechanism. Again, as you have been saying, smallholder farmers need to be able to afford these solutions. So it is a matter of choice for them whether to take it up. For a startup, it needs to be a viable volume of business also. So it can't be doing one, two, three farmers unless there's a significantly large number. They cannot invest their manpower, time, and money into offering these solutions. So this is where the dilemmas exist, but where a startup is genuinely farmer focused. Again, I think many of the solutions that startups have developed are sitting in air-conditioned cabins in cities. So they are not really customized for farmers, and there is a lot of imagination that is not realistic in these solutions. And unless these startup founders or their teams move to the ground and really directly interact with farmers to explain to them how relevant these solutions are, how these can benefit them. It has always been a kind of a difficult thing. Whatever statistics we have, less than 10% of farmers have at any point in time worked with these agri startups in some way. So technologies that they have developed exist but have not reached the farmers so far for many reasons, for affordability, for access, for trust, for knowing that these exist also. So these are all the issues that are there. Some of those startups which have a FPO focus have been able to crack this. So those who have a clear FPO focus, work with them and partner with them, have field teams operating on the ground, have been able to find solutions that FPOs have adopted. But it's a journey that will take its own time. There are other models, village level entrepreneur and other the dealer distribution model. There are different ways of delivering these services. Not necessarily it has to be an FPO all the time.
Devin sir, I would also like to have your points when we are discussing about the role of startups and FPOs together. So, how do you scale up and reach to small farmers? And do small farmers accept your technical expertise? Because again, there is a lot of trust issues and affordability issues when we talk about integrating technology with farming.
Yes, I could I could explain with an experience what we done in real world condition. We done a pilot project in a tribal farmers in between. That is in Vattavada region and Gundalpet region, and we could see that they're spending around 100 to 150, maximum 200 rupees per acre. uh, that was only labor cost for the crop spraying activities what they're doing. So when we entering with a charge, like initially we are into as a subscription model, as a service model to the end users within the range of 600 to 800 rupees per acre, including the crop analytics and spraying. So, which is not convincing that farmers because they're spending only this much amount. So they don't want to take add-on amount and for adoption of technology. So that changing their mind, it's a difficult part for us. So how we tackle that? We ask them to do a project uh, to see how they're impacting because in that particular field we could create around 30-35 percentage of yield increase and conceptual reduction of agri inputs with respect to their conventional practice around 70 percentage and replacing the labor and other tractor or equipments and other consumables. And on an average, we calculated that difference with the technology what we providing. They getting an 1,000 rupees with the respect to yield change. It's a add-on benefit to them with their traditional practices. So then they tried to adopt in a wide scale, and even it is in the case of small scale and larger scale farmers, for particularly for FPOs. Similar approach, uh, we don't tried in any all the field. The validation we done with the stakeholders that we replicated in between them, that experience sharing and the validation we done with the agri universities and the existing customers, word of mouth also helped us to get more customers from the FPOs level and larger scale. So yes, of course, it's not a shortcut. Like I tried to say, it will not work in a short period of time. There is constant evolution or constant engagement with the farmers should be required to convert them to adopt the technology interventions in their farming. That's my experience from our technology interventions. Yes, that is meeting the questions.
So I have a final question for all the speakers here. So my question is like when we all discuss about agriculture, we start with telling climate problems. We address the problem of fragmented lands and marginal farmers. But as we move on to the Vikasat Bharat, the 2047 plan of India, we talk about FPOs, technologies as the future of Indian agriculture. But after interacting with the stakeholders and having a field experience with different sector farmers across Kerala, what as a person I understand is that agriculture has a long way to go, and integrating with FPOs and technology at this stage when we have lot of farmers and marginal farmers who are confused about technologies, investment at FPOs is a very difficult task. So I would like to know how does organizations like agri-startups like Fuselage and foundations like Samunati and investment banks like Caspian pitch in, and how can we revolutionize agriculture into a modern and technical entity?
Can I go first?
Yes, sir. Yes, sir.
Okay. Again, a good question. I think the future definitely for the Indian, as you rightly mentioned, right? The smallholder farmers, the percentage of smallholder farmers going to increase. Land is getting more fragmented, right? In the last 2 decades, a lot of work has already happened, but today everybody is mindful of, yes, the basic in terms of income of the farmer and all has been looked at in terms of other challenges like access to finance, market and all. So there are a lot of these discussions and solutions are being worked out. And if you look at today, from a FPO lending perspective, Samunti is the largest lender. But as we speak, there are many other NBFCs and banks who have also come forward and started lending. So from that perspective, it's not that FPOs are not able to get access to finance and all. It's not a challenge. Now there are a lot of avenues being available for them to approach many of the mainstream banks and others. I have to give an example. There are many of the FPOs with whom Samunati has already engaged in the last 5-6 years. Now they have transitioned to a public sector bank because of the impeccable track record that they have built with Samunati, and they are able to, get a better credit score or a credit bureau, what I'm talking about, which has given them access to capital at a cheaper rate of interest, right? There are institutions who are looking at this space. Now, many of those people are coming forward and talking about a co-lending opportunity. They are talking about the blended finance, right? They are talking of risk taking. So there is a lot of things that are happening. And many of the institutional players from a market perspective are also getting connected with the FPOs because they see potential over there, right? Now, as I said, your advisory, policy, finance, market is taken care of. Technology is also coming to this, right? So very important is what we spoke about is there is climate which is going to impact. So that's how we at Samunati Foundation are looking at how can we engage with the smallholder farmers, definitely through the farmer producer organization, on initiatives that will take care of climate smart agriculture and sustainability. So we would like to look at in terms of can we engage with a set of 10,000 farmers on a pilot, look at from sowing till harvest, do an integrated value chain project, bringing in not only from the soil, which is a starting point, right up to the package of practices, right? How can you bring in more organic inputs and less use of chemicals, pesticides, and other residues, so that over a period of time, the yield improves. With the increase in yield, automatically your quality of the produce is good, you get a better price. By looking at all, and this is happening in one crop cycle, you have to be patient enough to engage with the smallholder farmers and the FPOs over a period of 4 crop cycles so that you are able to demonstrate this. End objective is successfully demonstrate this project with a set of farmers who adopt the package of practices, who follow the entire process, wherein they slowly decrease the use of chemicals, pesticides, and increase the input side of the business like the biochar and all. This takes time. Once you have done this, when you have built the trust with the farmers, because they are also aware of the excessive use, how it is really impacting, and the harvest, they are also aware, the chemical is there, how it is really impacting the health of the. So they are also mindful of this. So the very important thing from a Sammunity Foundation perspective is how do you do these large projects, get into all this, and over a period of time, you can get into carbon credit, and too early to talk about at this point in time, because as you rightly spoke about 2047 or the COP and all, everybody is talking about it, billions of dollars are being spoken about. But today, on the ground level, does the farmer know what is a carbon credit? Because the farmer expectations will always be there. If you go and talk to them on day one, I will give you, X amount if you generate so much of carbon credit. It takes time. And carbon credit is not something, you do it in one crop cycle, 2 crop. It has to be consistent. It has to be sustainable. So we at Sammunati Foundation is working towards that direction. How do you get into, more sustainable and climate smart agriculture with the main objective of can we get that package of practices to the smallholder farmers, make them understand, engage with them on the entire process so that you build the trust and you also document the entire process so that there is transparency. And once you have built that, we always see all the ecosystem players are already getting aligned with them. When I talk of ecosystem players, we have got the active players who wanted to come and engage in the program. We would want all the institutional commodity players who would like to buy the harvest, because now they say there is a sustainable program being running and let them be also part of this. And because they have tested the entire process, they also saw the quality of the produce. They also say, hey, here is, we would like to be part of this because end of the day, farmers are important to us. Can we also play that role and give them a small additional premium? We are not talking of 10 to 15% premium from the market price. No, even a 2 to 3% premium is good enough for them to get that confidence, because this is not a one-time activity, because it's for the future, right? So this is what is Sammunati's Foundation's objective, taking into account the climate impact and how we can get into the entire end-to-end process. We call it as a climate smart agriculture and sustainable, bring all the stakeholders aligned, because one Sammunati Foundation cannot do, right? An agronomist can do 1, 2, 3, 4. A tech company can do multiple things. So how do you integrate all this? So Samruddhi Foundation takes the lead. We become the lead partner to execute it on the ground because we have the reach, we have the FPOs, we have the smallholder farmers, we can bring in access to finance, which all is already been there. But how do we integrate rest of the ecosystem players so that to make it more successful with the main intention of can we get that additional income in the hands of the farmers? Can they transition towards more sustainable agriculture?
Emmanuel sir and Devan sir, do you have any views on the future of agriculture and pathways ahead?
Uh, So what I see is that the structure of ownership of land is not going to significantly change in the near future. And therefore, we have to take that as a given and proceed whatever in your policies. And nor is there a shift out of agriculture yet. Neither the secondary or the tertiary sector will be able to absorb the large numbers which are surplus in agriculture. So, seeing all that, the design of what needs to be done has to be worked out. Again, in my particular view, we are seeing uh, that farmers are very smart. So, as Devan was saying, if you can demonstrate to them that there's something which makes economic sense, adoption will happen. You don't need extension or you don't need FPOs to do that. If the farmers understand and can see that there's money to be saved or money to be made from these new technologies, they will get adopted. Over a year or two, they will spread. And to make that happen, what we are seeing again is what we call farmerpreneurs, farmer entrepreneurs. Largely, these are people in the 20, 25 to 40 age group of farmers who are open to innovations, who are doing things differently from their uh, ancestors, and who are primarily invested into agriculture, who are not urban living, part-time agriculturists, or have another source of income, and agriculture is just a secondary source of income. So these agripreneurs that we are seeing will lead the transformation that's going to happen in agriculture. They are the ones we believe need to be the focus of our attention. They are a very small number, 10 to 20%. And if we can get them on board, identify them, and involve with them, engage with them, and take technology solutions appropriate to the region, to the crops that are operating there, then those transformations can happen very quickly. We are seeing those in institutions like Sahyadri and others. And it need not be as big, as commercial as Sahyadri. It can happen with other crops. It can happen with food crops. It can happen with sustainable farmers, also small farmers. So, agricultural transformation, we are already seeing this being done, but I think consciously need to build solutions that center around farmers who are entrepreneurial, who are in the middle age bracket, who are primarily into agriculture, not incidentally into agriculture. All these, if taken care of, would see a big transformation in agriculture happening in the times to come.
Devan sir, I would like to have your views also. About how can technology be a way forward for agriculture?
Yeah, I can relate it to that. Can explain in two perspective, that is in the product line and the end user side. In the product line, we introduced a a particular product we designed for Indian agriculture, considering the economy perspective, affordable drones, and second thing is, uh, the end users could be easily making profitable. Like we target around 200 to 250 working days to get the ROI in a short period of time. Uh, so next product we are coming with a multi-purpose and increasing the capacity of that product. Our target is 150 to 200 days return of investment should be get to the end users. All these concern, like we could get that when introducing the first line of product in ecosystem enablers. So we getting the feedback, yes, it is making good revenues to the farmers, and the time taking for that revenue, it could be reduced. That would be really helpful for them. So understanding that perspective, we are designing another product for the farmers, and maybe next 6 to 8 months, new product line will introduce in between them. So that is the first line, and the second, the return of investment perspective. Even the small or larger scale farmers, we designed that product for different perspective. That is, even the small scale farmers, they could adopt the technology as a subscription model, or either if they want to make it as an entrepreneurship model, like if adoption with that technology after their use case, they could establish it in nearby areas. That knowledge sharing also, like there is proper knowledge sharing should be required for that. Some standardization in crop specific level what we done, that should be replicated in many landscapes. That's our approach, and that is we trying through these farmers as an entrepreneurship model. So it will help more engagement in terms of technology adaptation, and as well as making more entrepreneurs in from the farming segment. So in last 5 years, we could create a good examples, but not in a very good numbers. Maybe 60, 70 farmers still they are doing after adoption. They as an entrepreneurship model, they are working with the drones. So that we could see in many states. So similarly, a constant intervention should be required when we introducing a technology. How it is, a constant monitoring should be required, how it is affecting and how it is helping the community, how it can be more interventions in their farming practices. Yes.
So, taken together, today's dialogue makes one thing clear: future proof farming is not about romanticizing agriculture, but about making it economically viable, resilient, and attractive for the next generation. Achieving this will require coordinated efforts across policy, finance, and innovation, placing farmers not as the beneficiaries but as the central economic agents in India's agriculture transformation. Thank you to our distinguished speakers and to everyone who has joined us today. We hope this dialogue contributes meaningfully to rethinking how India builds a resilient and inclusive agri sector. CPPR looks forward to bringing you more such conversation on key policy issues in the future. Stay connected with us through our social media channels for updates, insights, and information on upcoming events. Thank you once again for joining us, and we look forward to welcoming you at our next session. Thank you.
Yep.
You.
Thank you.
Thank you. Thank you so much.